Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. In trade yesterday, on the back of a weaker set of quarterly numbers from HDFC Bank, and in addition to the sharp spike which was seen in the dollar index, both these factors led to extensive selling pressure which was seen in the market. Bank Nifty especially witnessed a sharp downtick to the tune of nearly 4.3%, while Nifty ended the day in the red, down 2.09%. Extensive delivery-based selling was seen across HDFC Bank, ICICI, Kotak, Axis, Federal Bank, which kept Bank Nifty under pressure right through the day. Coming to the macro factors, the dollar index broke above its 13-day range, marking a potential change in sentiment in the currency basket as it approached 103.5 levels. US 10-year bond yields too experienced an uptick as it is comfortably sustaining above 4.05 in tandem with the dollar index. Meanwhile, crude remains steady between $75 to $80 a barrel. Quick check on the global markets. So yesterday there was economic data pertaining to which was seen in the US markets. The data came in positive, an uptick in US retail sales, but this did not impress the US equity markets as it pushed back the expectations of a near-term interest rate cut by the US Fed. The S&P 500 experienced a price rejection near its lifetime high, that is the levels of 4,800. Overall, if you see the chart structure, the momentum continues to remain bullish, but for fresh emergence of momentum to come, the index should surpass the levels of 4,800. On the downside, the previous swing lows, that is the levels of 4,630, 4,665, would act as an important support level. Coming to Nifty, Nifty has slipped below its 20-day EMA that was placed at 21,580 levels. From short-term perspective, the index needs to the next support is likely seen at 21,300, 21,350 levels, and the resistance on the upside will be closer towards 21,620, 21,650 levels. In case 21,300 is breached, the index could slide towards 21,160, 21,080 levels on the downside. While on the upside, in case 21,650 is taken out, the index would resume its prior uptrend towards the levels of 21,790, 21,850 levels. Coming to the OI data, the cumulative futures open interest for the index declined by 7%, while the price fell by 2%, indicating long unwinding of positions in the futures segment. Nifty PCRI also has cooled off to 0.55 levels as it approached oversold zone. Put writing is seen in 21,500, 21,400 strikes, while on the call front it is majorly seen in 21,600 as well as 21,700 calls. Overall, the range for the next few sessions could be 21,300 on the downside and 21,700 on the upside. Coming to Bank Nifty, going forward, the 50-day EMA zone of 46,400, 46,500 is likely to act as resistance, and until this holds, the index can experience further selling pressure towards the levels of 45,600, 45,700 mark. In case 45,600 breaks, the index can retest its next support placed at 45,200, 45,150. Tracking the open interest data for Bank Nifty, the cumulative basis, the futures OI surged by nearly 28%, while the price fell by 4.2%, indicating fresh short built up in the banking index. Bank Nifty, if you see, the PCR is currently at 0.65. Significant open interest built up is witnessed in 46,200, 46,500 calls. And on the put side it is seen in 46,200, 46 puts, implying a range of 45,400 and 46,400 for the coming few sessions. Next few sessions are going to be crucial for Bank Nifty as the numbers of ICICI Bank and Kotak are to be released in the next few trading sessions. Stocks and sectors in momentum. The most noteworthy companies whose results would be declared today are IndoSyn, Polycab and Tata Communication. Coming to sectors and stocks in momentum, so if you see, railway stocks continued to be in traction. The likes of RITS, RVNL, IRCON, IRFC experienced buying with the heavy volumes in trade. From the broader market, if you see, bullish setup was observed in HCL Tech, Hudco, Minda Corp, BPCL, IOC, Hercules, Karnataka Bank, LTTS, Mirza, Minda, and Specialty Restaurants. Coming to the FII DI data, in the cash segment, FII sold to the tune of 10,578 crores, while DIS bought to the tune of 4,006 crores. FI long short ratio for index futures worsened to 54.15 on a net basis as they sold about 58,945 index futures. On the stock futures front, FIs have sold to the tune of nearly 79,504 contracts, while on the options front they sold 4,52,583 call contracts and 4,17,203 put option contracts. The above data built up surely indicates unwinding of the long positions by FIs in index and stock futures. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.